Good evening. Ira Epstein with your Metal Market Wrap-Up, and this wrap-up is for Wednesday, the 23rd of October, 2024, 6:15 p.m. Central Time. So, correction day. It happened in the stock market, pretty good size correction, happening in the metals, in the gold and the silver, although you're getting a bounce tonight in both of those. We're getting a little bit of a bounce in a number of the currencies, and they were down against the dollar one more time. But so far, no bounce at all in the bonds and the notes, and they just continue to crank on and go to higher and higher rates as they have become determined that no matter who wins the presidency, we're just going to continue to spend, and the market is very uncomfortable with that. Is it uncomfortable enough to make the Fed consider a pause? Well, that's possible. We had the Fed beige book, not much change from the last report that I saw. I think some people were doing counting it 15 times, they said. I didn't count it. The election was named. So, that's weighing on people's mind. What are the employers going to do? Who do they see doing what? We'll see. Goldman Sachs came out today with a bold statement. They said the euro could go back to parity if Trump wins the election. So what people are looking for is a huge tariff increase, dollar gets strong, interest rates strong, and dollar's the place to be and other currencies might dump. What they didn't say is you're going to have a series of cuts anyways in a number of these different markets, especially the euro, as the market is looking at weakness throughout their union and the way that the bank has to make things come up. Their battle's inflation. They're beating it. They can afford to take rates down at a very measured pace, but a continual one to try to prevent inflation from coming back up, but getting the economies back on their feet. Before we maybe get into the gold, we should take a look here at the day's events for tomorrow. You're going to get jobless claims coming out at 7:30. The Chicago Federal Reserve, the September National Activity Index will be released at 7:30. S&P Global Group's going to release their October manufacturing and service sector PMIs. That'll get a lot of attention. That's at 8:45 in the morning. So those are the events. I was looking for more Fed speakers today because I heard they'd be speaking, but I didn't see anybody pick up on anything from them. I know Michelle Bowman was one of them that was going there. Forgot who the other speaker was, but I'm sure we'll get some more as time goes on here. So in the gold market, as you can see, the market is for the week, and this is a weekly chart of the last price. That's all it is. So on Friday, it'll plot itself and go. From Friday, you're up 0.3%, basically unchanged, but you had a big key reversal outside day down. Now, for those of you that don't know what a key reversal is, a key reversal occurs when the market makes the highest high of a move, takes out the prior day's highs and lows. And if it closes down, it's a key reversal down. If it happens at the bottom of a move, it's a key reversal up. Some chartists put a lot of weight on it. They say, that makes for the market setting up a trading top. Doesn't mean a change of trend, but a trading top. We'll see. But right now, that's the number I'd look at, the high there, and let's get to it. You can see if I back off just one day here, was 27.7260. So we're right now trading in round figures from that. Let me get back this way. 40 some odd dollars from it. Okay, not bad. The pattern is still bullish, higher lows, higher highs on the swing line. Remember, the swing line is an indicator I wrote many, many years ago. It's probably now, I was thinking it through the other day, it's got to be 26 years to 27 years ago that I wrote this indicator. I did it for my son, and maybe he was 12 at the time. I'm giving his age away. And in looking at this, I said, I can walk you into any room, you put this on, and you can tell anybody in that room, because I always had friends over, we talked charts and so on. You'll be able to tell them. And this was before all the computers that we had, and we were drawing lines by hand. And he'd do it, and he'd walk out of the room, smug little guy. It was very cool. Well, there's my cats having a good time. I'll have to show you Ivy Rose again. She will be there shortly. But we have higher lows, higher highs as this market is working out. I see support if the market wanted to fall down there at 26.88. And from here, that's another $50 break. I'm not saying it'll happen. That's an awful lot to happen very quickly. I'm more inclined to be looking that the market was running the Bollinger Band that pulled inside of it. That's what bull markets tend to do. They'll stay out of it for a bit, then they pull back in. And what I want to see is, does this market embed? It's not trying to. It's just staying overbought right now. Overbought means both numbers are not staying over 80. Now, if we step back another day, get rid of tonight. Both numbers were over 80, as you can see on the close today, Wednesday. And if you and I take a look, they were both over 80 on Tuesday. So tomorrow's a very important day. If the market can close back up and get it to embed, it will be a sign the market's trying to lock in that upside momentum. Otherwise, there might be more lickety-split trading like that going on right here. In the gold-silver ratio, a little bit of a bounce. Okay, I don't see a trend change. Silver's still looking pretty good. Silver did not have the same pattern as gold. It never did get through the highs of Tuesday. It made its high today that was lower and just pulled back into the band. It too is overbought. So I'm hoping to see that these markets back off a bit more for potential buying opportunities in them. In the copper market, you know I have not been bullish this market. It has, number one, been under, and this is the important thing. It has stayed underneath the 18-day moving average of closes, and this market is trying to embed bearish. You cannot count today being Thursday, actually not today, but the new session of Thursday, but you can count how the market finished on Wednesday. You can finish at how it finished the day before. See that 20 reading? You're not embedded. So all you have in this market is an oversold condition that has been fighting nonstop the 100-day average of close under the 18. And as I said, if it lets go, and I don't know if it will or won't, then the next support's the 200-day average, 428.40, let's call it, to 423, let's call it 424, right in that zone that I could see the market going. Is it trending? No. Is the bias down? Yes. Is the market down hard? Yes. It's not new lows or anything like that either. In the platinum, every day I told you how surprised I was that the market got up to the upper band, and it's backing off now with all the metals. It too is not embedded. So let the markets either embed or work off being overbought right here a little bit might be the theme, but nothing's stopping this dollar. You got a fully embedded reading. Eventually, we know it'll consolidate the gains it's made, but it's not been streaking up. What it did is it got up to the 200-day average in the Bollinger Band and the 100. Then it moved sideways, a very unusual move, and started making the higher highs, higher lows. This market is not excessive. I know you're going to think that I'm crazy when I'm saying that, but as a chartist, no. It's not excessive on this chart. Could still be headed to the 104.68 level. So you put it all together, you try to come up with game plans, and you might want to follow me with them. You know, our free offers, if you go to our website, iraepstein.com, our free offers are there. And when you're there, by the way, you might want to look. My dollar report will go off my website before midnight Central Time today, Wednesday, the 23rd. So if you see it, it's your last shot at it. But you can get my other research. You can see my morning subscriber videos if you haven't tried them before, where I say buy here, sell there. And then you see a spreadsheet of all the trade recommendations that we have open, where the trades are. I follow a trade when this comes out from beginning to end. I don't publish a track record for you to say, well, look, Ira for the year did this and that. Each trade stands on its own. I am not trying to get you to have a managed account with me. I don't manage other people's money. Got that? I do what I do without the pressure of it. I love charting and love telling people, here's what I see, this is what I think you do, and away you go. Given all that you have here, why not take a look at this? iraepstein.com, free offers. There'll be a cursor at the top. If you move your cursor up there, an icon, you can also give that a click and it'll take you right there as you have a question. If you have any other questions, just call my staff at this number. I'm Ira Epstein. I'll catch up with you in the morning.